if you're looking for the easiest way to scalp volatility indices, then this is the strategy for you, right? So right over here on my chart, two moving averages, right? So I've got the 50 moving average exponential applied to close. I've got the 50 and the 200, the same parameters, right? And over here I've got the MACD, the default setting, and the stochastic, the default settings, right? So on the MACD, let me just put one other indicator so that it becomes a little bit clearer to see, right? So let's go to view navigator. Then right over here we're going to add a moving average to the what a moving average to the MACD, right? So we'll drag this over here. Now we're going to be using a period of 1 method. You can use exponential. Then take note of the apply to apply to previous indicator data or first indicator data, right? Those two, they just work the same, right? Then I'm going to be using black again for that, right? You can use any color of your choices. You can use any colors of your choice, by the way, right? So over here, what do you have to look for, right? So first of all, we have to determine the higher time frame trend, right? So to determine the trend, we can go to the 1 hour time frame or the 15-minute time frame, because since we are scalping, we can go to the 15-minute time frame to see our trend, right? So let's just go to the 15-minute time frame, right? So over here, right, we can just use the trend that we see or I was seeing on the 15-minute time frame. So how do you determine the trend? So I've got about 3 ways of doing this, right? So first of all, there's the price action point of view of it, right? So as you can see, we're just creating a series of in this case over here, right, we are creating a series of higher highs. So we've got this higher higher low, slightly higher, then higher low, higher low, higher high, and higher low, right? So this is essentially an uptrend, right? Then for the indicators, though they're a little bit slower, right, I would like to see if it is an uptrend, right, then I would like to see these two moving averages below the market, right, below the candlesticks, right, especially the 200 moving average. The 50 I can use it for my entries, but the 200 moving average has to be below the candlesticks so that it becomes a proper uptrend, right? So if they are above the candlesticks, it means that it's a downtrend, right? Then I can also, for the third method that I can use to determine the trend, I can also use the MACD over here. So if the MACD over here, if these histogram bars, these small gray bars, vertical bars, if they are below the level 0, it means that the market is in a downtrend, like what they are over here, right? It means we're just looking for selling opportunities over here. And when these histogram bars are above the level are above the level 0, so the level 0 is somewhere the midpoint. I think you can see it, right? So if they are above the level 0, it means that we are in an uptrend. So starting maybe from which point, right? So let's say it doesn't matter, but starting from this point over here, right, we're already in an uptrend, right? So according to the MACD. So when all these aligned with each other, right, so we know that we are in an uptrend starting from this point over here, right? So we drop down to a 5-minute time frame. So we are going to be taking our entries on the 5-minute time frame. Yeah, you can use the 1-minute time frame, but I don't encourage you to use the 1-minute time frame. I encourage you to take your entries on the 5-minute time frame. But if you want to really scalp, yeah, you can use the 1-minute time frame. The strategy is still the same, though it's a little bit faster, and it will become hectic, and your chances of losing will be slightly higher again, right? So when you drop down to the 5-minute time frame, right, what do you want to look for, right? So first of all, we just want to enter in line with the trend, with the high time frame trend. So since we know that we're in an uptrend, right, so right over here, we wait for the for the moving averages to be below the candlesticks, right? For the 200 moving average, the purple one, to be below the candlesticks, right? So that we know that we're in an uptrend. Then if the MACD is also below is also above the level 0, we know that we're in an uptrend, right? So as you can see, we could have used our MACD for our entries, but as you can see, it's quite slower, right? So the MACD is very slow in giving us our entries, right? So we can check this example over here. It gave us our entry after this large candle, and we only went till this far. For the downward crossover again, we will exit at break even, right? So we won't be making much profit over here, right? But unless maybe we are holding for a long time, right? So that's why we are going to be using for our stochastic for our entries, right? So we are going to be using our stochastic for our entries right over here. Since we are looking for buy setups only, right, you can enter when the stochastic crosses over for a buy over here, right? You can enter over here, but the best entries usually come when the stochastic pulls back to the level 20 over here, below the level 20 or around the level 20, right? Unlike if they end in the middle, right? If they end in the middle, most of the times the market will be truly trending, and you can take that trade. But this is where you need to do a little bit of backtesting to see which works best for you. If you just have to wait for these setups alone, but whenever the stochastic crosses in the middle, it means that the market is truly trending. It doesn't have it doesn't have time to come back below this over here, right? So as you can see, like something over here, right, is still in an uptrend. That's why it's still just crossing in the middle. But if you enter over here, you know that you have a little bit of room for you to hold that trade a little bit, right? Then for your exit points, right, so let's say you entered over here, right? So when this crossover happens over here, right, for exit points, you're going to be exiting when the stochastic crosses again for what? For a downtrend, right? So somewhere over here, right, that's when you'll be exiting, right? So that's just what you have to look for right over here. We've got another entry somewhere over here. Then over here, why don't we have an entry over here? Who can give me an answer in the comment section down below. Okay, right over here we don't enter because the MACD is below the level 0 in this case over here, right? So we don't take an entry over here. And right, we start looking for our entries again somewhere over here when the MACD is above the level 0 again, right? So we enter over here, right? When there's a crossover, right, we hold until what? It crosses for a downtrend again, right? So as you can see, this is a very simple strategy to use when you want to scalp, right? You just enter when the stochastic crosses over, and I think that this is actually going to make you a lot more profitable than what you are right now. So if you think that this video has been helping you so far, I would really appreciate if you just like or subscribe, or just leave a comment of what you learned in this video. Right over here, as you can see, we enter here, right? And as you can see, wow, this was a perfect trade. It even continued even further, though we would have already exited when the stochastic crosses over here. But since you just want to scalp, that's all you have to, yeah, that's how you just enter, right? So over here you take all those entries, right? So that's it for this video, guys. And I mentioned that you can also use the 1 minute time frame. Let me just show you how you can use the 1 minute time frame. Though the 1 minute time frame, yeah, it does work. You get multiple chances to enter, but your chances of losing money will be higher because you get too many entries, and some of them you might end up losing those trades, right? So now I'm going to be using the sale setup for examples, right? So the moving average is crossed over for a downtrend. We're only going to be entering when the MACD is below the level 0. So right over here, I've got an entry, right? We hold. We've got another entry over there. We hold that up until here, right? We hold. We exit somewhere in the middle, right? Then this one wouldn't enter because the MACD is above the level 0, so there's no entry over here, right? That's just what we have to look for again, right? So over here, MACD is below the level 0, crossover, we enter, right? So why do I like to use the stochastic? The stochastic, which means that your stop loss is going to be what? Is going to be very small. Let's take this for example over here, that we crossed. Oh, this was already a downtrend, so we didn't have had our buy entry over here. But let's say we wanted to enter for a buy over here, right? As you can see, we enter for a buy, right? And immediately the stochastic crosses over again for a downtrend. So you just have to exit that trade immediately. So your loss isn't going to be that much big, right? So even if you use the 1 minute time frame, you're still going to be profitable because your stochastic crosses over for your stop loss, right? So right over here, let's take this for example, right? Our moving average is crossed for a buy trend, then MACD histogram is above the level 0, right? And we get a crossover somewhere over here, right? And as you can see, the market continued going down a little bit, so exit on this candle, right? And you can enter again when the stochastic crosses over again, right? And as you can see, you hold that up until somewhere over here, even though it continued even further. And so that's it for this scalping video. And if you think that is helped you, you know what to do.